Cracking down on crypto, the SEC now looking into dozens of companies involved with cryptocurrency trading, particularly companies who decide to raise money using the new form of digital cash. Hillary Vaughn sat down with the head of the SEC in a Fox Business exclusive. She has this exclusive report for us now. Good to see you, Hillary.
Hey, David. Good to see you as well. Well, initial coin offerings are bigger than ever, and the chairman of the SEC says he has his eye on a few of them. I sat down with Chairman Clayton for an exclusive interview, and he tells me that they are currently looking at several ICOs to make sure they aren't violating security laws. He says a lot of ICOs he has seen are actually securities posing as ICOs and should fall under SEC jurisdiction, but some businesses are using these ICOs to dodge SEC oversight.
For some reason, people selling ICOs seem to think they don't need to follow either path. They seem to think they can have the best of both worlds, a limited disclosure from a private placement and public trading and public offering of the token. Abide by the law. We're watching. Others are watching.
Telegram, an encrypted messaging app company, has broken the record for the biggest ICO campaign of all time. They've already raised over $850 million in the first 2 months of fundraising out of what is expected to be a $2 billion ICO. But critics say some companies are exploiting these ICOs as a quick cash campaign to pay bills with no guarantee for investors.
We have seen instances where companies seem to have had trouble raising money in a traditional private placement and then have switched to an ICO in order to raise the money. The business hasn't changed substantively, but it's a form over substance way to raise money. That is troubling.
So an initial coin offering is when a company sells a token instead of a stock to an investor that's looking for a return on that, but it's not regulated by the SEC, which is causing some concern. Clayton tells me the SEC is devoting a significant amount of resources to this crackdown because Main Street investors are at risk. He says he worries that investors can be easily tricked by these ICO listings that look like they're a listing on the New York Stock Exchange and think their token investment that they're purchasing is protected like a share of stock when it's not. David?
A lot of cryptocurrency owners are a little wary of the SEC getting involved here, so it's going to be interesting to see how it shakes out. Hillary, thank you. Very interesting. Appreciate it.